What's good, everybody? Today is 9/19. Welcome to the trade recap of the day. We're going to run through the really nice long I took that ended up getting stopped at break even just to a simple error in terms of pair selection. So we're going to dive into that issue and look at the super clean price action from the day. So without further ado, just hop straight in. All right, so zoom out to the hourly time frame, right? Overnight, we set up this super clean low resistance liquidity run. Like coming into the market, there is nothing in the world that wants to give me any kind of bearish bias, right? At this point, we opened the market right about here at 9, right? So right at 9, we opened the market. At this point, we've already made bullish change in the state on both indexes, and there's nothing that tells me that we want to go ahead and continue lower, right? Like we looked at earlier, we had SMT into this value gap sitting something like this right here. And then as well, we also had low of week SMT right about here, Friday to Wednesday, or I think it was, one of these lows down here gives some kind of really clean SMT that I want to see this now stay protected, right? And then as well, since this low is an SMT low, I want to see that one stay protected as well. So we see price during Asia session, turn on sessions right here, or actually London. So it starts to manipulate down into consequent encroachment of this wick, right? I believe we barely tap it. Yeah, like literally barely tap it. And then we start to push higher, right? So we just tapped consequent encroachment. We just took Asia. And the reason that I'm not looking for now a reversal because we took Asia is even though we didn't take London down here, the higher time frame aligns with going higher. So there's no reason to look to trade some kind of reversal simply because of the higher time frame, right? So looking now lower into it, all I want to see is consider this. If this was a 1 minute model right here, let me just simplify this a little bit. If this was a 1 minute model, I want to now take a position like this, right? I want to take my position at the change in the state or the fair value gap, whatever it ends up being. And then I want to look to target this high or whatever I can, right? Something like this I want to do if I was trading this 1 minute model. Now, if I'm trying to zoom in and get that sniper entry, I want to do the exact same thing, right? So all I'm looking for is on market open, I want to see a rebalance down to this blue line, which is my change in the state level. And then I want to take it along to wherever the previous high was and leave runners for the external model, right? So on market open, we come down and literally immediately within minutes, like the first 3 minutes, we come down and tap that change in the state level. We start to find some support on that level when we start pushing higher, right? The big thing to understand here was that on NQ right here, we had done the same thing, but we made SMT on all these internal lows right here. So we quickly just draw it right here, right? So SMT goes right about here. This is where we didn't take the low and we didn't tap into a fair value gap and change the state level. So NQ is much more bullish than S&P, right? However, I'm still looking to trade the S&P 500, and that's because if we look, I see S&P as having more movement. So at this point, I'm looking to trade the S&P because I see that it has more movement. It's ricocheting back and forth. Like it looks like it wants to start moving fast, right? I see manipulation and I want to start trading the other side. So I end up taking this trade, right? I get my change in the state, and although there's no generated liquidity to the left here, narrative was stronger and more important here. So I look to take this position, right? So I put my position on. I place it right about halfway through this candle looking really strong. We get a pull back, almost comes down, stops me out, right? I put my stop right here because we had a little tiny internal SMT. So whatever that SMT low is, that's not the protected low. I put my stop down right there, and then my take profit at the top of this internal high. And I'm looking to leave runners all the way up to this level, right? So price literally edges it so perfect, so close. Like it gets so close, it's crazy. And then it starts to push back and I get stopped to break even. Overall, I'm not mad about the trade, but I recognize that this could have been a way cleaner setup that would have printed money if I took it on EF or NQ, right? So the difference here is looking at, I'm taking a long, I want to trade the stronger pair, right? If I'm taking a short, I want to trade the weaker pair. It's simply a lesson that sometimes you have to recognize what's the pair that's moving more. And sometimes you have to recognize what's the pair that's in line with the direction I want to trade, right? So at this point, both of my pairs are moving nicely, right? ES looks really nice, like it's moving a lot. And then NQ also looks to be moving a lot, right? We're getting strong displacement lower, displacement back higher. It looks good, like we're going and moving a lot, right? So that's what's telling me that I don't need to look at which pair is moving a lot because they're both moving a lot. There's not one that's stagnating and one that's moving a lot, and then I'll trade the moving a lot one no matter if it takes the low or if it doesn't take the low. But when they're both moving a lot, both my pairs have energy, I'm now looking to just trade the one that's stronger, right? The one that's easier and closer to delivering my take profit, right? So the best choice to trade that would have been NQ right here. We make that SMT, we go ahead and we create the change of the state right here at 937. I think we put in first presented on NQ at about 940 right here. Just quickly checking, where would 940 or where would first presented be on ES? It would be at 933, right? So at 930, yeah. So we're doing very similar price action until at this point, once we get that same displacement, we get the same displacement on NQ, looking really good. It almost goes ahead and takes the high right here, but then it leaves it just by a tiny tick. And understand that the model is still valid until that point. So even though price just left that high just by a tiny bit and start to push lower with these huge wicks, the model's still valid to go ahead and find this level as support to then go push higher up to that draw, right? So this is now changing the state. This is where I want to take my entry, and then this is sell side or buy side liquidity where I want to go ahead and see if I can get my position fulfilled, right? So that becomes entry, which I should have taken, and then stop. This becomes first take profit, and then second take profit goes up to this high, which would have just completely sniped for 4.4R. And that's the top of the model high. That's exactly how I want to be trading this. Another thing you could have done was look for standard deviation here. I believe this was actually pretty aligned. Let me just quickly draw it in. Yeah, 2.5, right about at that level. That's when we start to find our top of the model high. So I mean, this was the trade of the day. It was super efficient, but the only reason I wasn't able to bang this is because I just simply didn't understand which pair to trade. Right? I made the wrong read on deciding which pair to trade. And the only way that I could have managed my position better, I mean, is at 953. Once we took that high, I could have just said, you know, I'm already up a lot in the week. I don't really need to trade at 953. I'm just going to take my position off or take partials at the very least, right? And that would have saved the P&L for the day. However, just recognizing that a lot of times, like at this point here on NQ, after we tapped that high, ES didn't take this high, right? So now I'm looking to see, at least expecting NQ to maybe find support off of this for value gap and then continue higher here. Let me just make this look a little bit cleaner here. So yeah, right here, I'm expecting NQ to maybe find some support off of this for value gap after it takes that high and then continue back higher. So I'm expecting to see some kind of move like this. And I'm expecting now that move to go ahead and fulfill my take profit. So I'm more confident in leaving it on than I am just taking a position off because I don't want to lose my extra $100 or whatever it ends up being, right? So it's kind of recognizing that and just realizing like the conditions. And I mean, this is probably the best trade in a while. I'm not gonna lie, this was very, very clean setup. We had multiple time frames aligning here. I think the lesson from today is to understand, how do I decide which pair to trade? And there's two things you have to look at. Number one, it is going to be movement, right? Which pair is moving more? If one of your pairs, this is the thing, if say ES is not moving at all, it's like completely looks like consolidation, where NQ looks like it's giving movement and an entry and maybe a model, then you want to trade NQ regardless of whether or not it sweeps a high or it doesn't sweep a high, right? But if both your pairs are showing movement, like I said earlier, it then depends which direction you're trading, right? So if you're trading along, I like to trade that stronger asset, right? Always trade that stronger asset because it's going to give you the more the easier time to go ahead and hit that first take profit or second take profit, whatever it ends up being. If you're trading a short, trade the weaker asset, right? It always makes more sense. And finally, if you're very, very convicted in your draw and you don't care about, you know, I'm trading along, but I'm still gonna trade the weaker asset because it gives me more R. If you care about the RR, trade for the RR, but you have to understand that you are incurring that risk in yourself, right? So that's the understanding that you have to have, that you're the one who's incurring that risk. So if you take the trade that isn't perfectly aligned with the logic behind the market, and then it doesn't end up, you know, fulfilling that full take profit, understand that you took that risk because you wanted the extra R. So, I mean, that's the only thing we need to really understand and think about and learn about in today's market is just which pair to trade, right? But I mean, geez, this was such an efficient trade. If anyone caught this, congratulations, bro. 4.34R on the day. I mean, that is fat, bro. So, right, I think the most valuable thing about doing a recap like this is to figure out what is the lesson of the day and then literally take that lesson and go ahead and apply it, right? Like, just figure out the lesson and then do what you know you have to do, right? It's like filling in a Connect 4 board until you fill in every single hole. That's our job as traders, to complete ourselves and our own understanding in mind and really get the knowledge and then go ahead and apply it. That's what real wisdom experience is, right? Actually applying that knowledge. So, I mean, this is the lesson from today. I'm going to make sure that I go ahead and apply this moving forward systematically, right? The strength and the weakness and all that good stuff and the consolidation versus the movement, that's going to be the thing that I go ahead and apply to every single trade moving forward. So I'm going to have to let you boys go now. Hope you guys enjoyed the video. So I'm going to let you boys go. Peace out.